Did you recently purchase a new house or planning on buying a new home before selling your existing house, and you want to use the equity in that home to pay down your new mortgage, hopefully lowering your monthly payments? Understanding how a loan recast works is your first step, and today I'm going to teach you the ins and outs of a recast, allowing you to use this to your advantage in order to get those lower payments you want. Hello, my name is Psaradelis with Team Psaradelis. The main reason someone recasts their mortgage loan is to lower their monthly payments without having to refinance. You see, a refinance to lower your payments could cost you thousands of dollars in fees, whereas a mortgage recast usually costs between $200 and $300, a huge savings for your budget. You can accomplish the same goal of lowering your payments on a recast versus a refinance, and your loan term stays on the same payoff timeline. So if you've chosen a 30-year amortization, 30 years to pay off your loan in full, your amortization schedule will not decrease by recasting your loan. On a refinance, your term starts all over again. The process is also a lot simpler than refinancing, but the timeline to complete it tends to be slower. Most refinances take 25 to 30 days, whereas with a loan recast, the process takes 30 to 60 days. A recast will keep the interest rate you locked in when your loan started, and a refinance will change your interest rate to where the current market rate is. So, if your current loan has a lower rate, this could be a huge benefit to keep it while also receiving lower payments. Now, let's talk about how to qualify for a loan recast. The first piece of advice is for you to reach out to your loan servicing company and ask if your loan is eligible for a recast. The servicing company is the one you make your payments to. They manage your mortgage. This is very important because not all loans allow recasting, including FHA, VA, and USDA mortgages. These government loans do qualify for a streamlined refinance, which typically is an easier process and can carry less costs than a standard refinance. Reach out if your loan is one of these and you want to know more about a streamlined refinance. And if your loan does qualify for the recast, the lender will require a good payment history with no late payments within the past 12 months. Now, if you used a seller-paid temporary rate buy-down on your loan, you want to check with your loan servicing company. Some of them will not allow a recast while the buy-down is in place. One of the pitfalls I've seen people do is they send in a large chunk of money for the recast, only to find out the bank assumed they were trying to pay down the loan through a loan curtailment, which is different than a mortgage recast. And just what is a loan curtailment, you might ask? Well, a lot of borrowers do this already. It's when you pay additionally toward the principal. So if you round up your payment to the nearest dollar, or pay an additional $100 every month, you pay your loan off quicker. As a matter of fact, the biggest difference between a loan recast and a loan curtailment is this. A loan recast is used to lower your payments, but not the length of time to pay it off. A loan curtailment is used to pay off your loan faster, with the payments staying the same throughout the loan. We're just about finished, but here's a couple of things I want to make sure you're aware of. You should know that different loan servicing companies require a minimum amount paid toward the mortgage to recast the loan. This amount may range from a lump sum of $5,000 up to $20,000. And last, while waiting for your recast to be approved, make sure you continue to make your payments on time. After watching this video, if you still have questions or are still unsure of what to do, I'd like to encourage you to reach out. My team and I love talking through situations like this to help you make a good decision on what the best option is. Thank you so much for watching this video.